Hi, this is Hyperwave. I'm Leah Wald and here with Tyler and his popsicle, naturally. And this is going to be a lot of fun. So, we are also going to discuss, besides Bitcoin price action and other fun stuff, the news that came out from the SEC today, which I know a lot of people have been talking about, and definitely we have been talking about it as well. So, Ty.
Great. Thank you, Leah. There are only three popsicles. There's Sky Blue, there's Root Beer, and there's Banana. All of the others are fake. So I just wanted to make that very clear before we got into the trivial stuff. We're going to talk about the SEC. It is very, very, very important. But as many very important things are, it's way too early to tell what the repercussions are going to be. So we're going to speculate on some of those repercussions. We're going to talk about Bitcoin because it's at a very critical juncture. If you've been following Tone, which most of you have, we're at this funny place down around the 6,000 level in which there's a triple bottom, or close enough to call it a triple bottom. And then all of a sudden, out of nowhere, the SEC comes out with this announcement that has some huge implications for cryptocurrencies and Bitcoin. And we get a bounce up to 6,700 approximately. I had already turned neutral when we when we hit the 6,300 level, and we kept on going down to 61 something, and then spent a day or so around the 6,300, and then all of a sudden it took off. And I became convinced very quickly that there's potential for the Bitcoin market to bounce a little bit higher. And I picked a number, 7,250. A lot of people were asking why, and let's talk about the 5% targets that I have. So we're going to do that tonight also. And then we're just going to take a look at Bitcoin itself, where we are on a short-term basis. This does not in any way change intermediate targets or long-term targets, but it complicates the short term. That's just on a technical basis. I want to talk fundamentals about the SEC and my interpretation of what's going on in terms of the implications for the future. So why don't we start with the SEC, because I think it's that important, and I'd like to get Leah's involvement. Leah's, as you know, is taking a big step tomorrow. She's a little bit nervous, as anybody would be, but you can hardly tell by seeing her or talking to her. So all the best wishes from everybody would be very helpful. I know she already knows it and feels it, and it's going to go wonderful. And 3 months from now, she'll be doing everything she has done before. And we love her, and best of the day tomorrow. I know you'll be in very good hands. Okay, the SEC. The maximalists have been saying for years that there is only one thing that is substantial in the crypto space, and that's Bitcoin, and there's only one blockchain that's substantial. Everything else is less than that. But that does not necessarily mean that they are all insubstantial. Then we got into this, what do regulators think, which is a separate topic. And the more the regulators understand what's going on with Bitcoin and the original blockchain, they're beginning to sort out the differences that the maximalists have been talking about. But we've all been just speculating about that. We just don't know what they're going to do. And as Giacomo would say, and Jimmy, it's almost irrelevant what they say, what they think, what they do relative to what people in the space know and understand. And unfortunately, by people, I mean those that understand what a maximalist is all about. Everyone on the other side that have become enamored with all the projects and the tokens and the ICOs and have participated in them, that's a different story, and it's very nuanced in a lot of ways. But today's announcement, I thought there was three possibilities of announcements from the SEC and the CFTC. The first was something they've been alluding to for the last 2 months, which is Bitcoin is different from everything else. And that made us all feel pretty good. All meaning the maximalists. And then they said all ICOs are securities. Now, all tokens are not ICOs, all tokens are not securities, but the vast majority of the 2,000 do fall into that category. So that was the second movement by the regulators. Today was decisive in my mind. It's incomplete at this point, but it's decisive. It's decisive because they made the point that Bitcoin is different, but so is Ethereum, so is Ether. That's a huge concession on their part to everyone else other than the maximalists. But it was not unexpected by me because of the practicality of taking something that is so broadly used and implemented as a platform. I'm not talking about Ether now, I'm talking about the Ethereum platform. That it was practically almost impossible for them not to do that, not for them to recognize it as not being a security. Now, Cone disagrees completely with that. I am sort of halfway in between. I disagree with it because I do believe it's a security, but I'm also very practical about what they can and can't do as opposed to what they should and shouldn't do. And what I suspected they were going to do would be to carve out a very small number, maybe 10, maybe up to 15 of all the tokens. I'm not going to let this melt. And exempt them somehow. I didn't think they could exempt them by coming right out and calling them non-securities. I thought they would be exempted, including Ethereum and Ether, on the basis of it's been so long since they've been around and so many people are invested in them at all levels, not just speculation or investing, but on the practical side of businesses, building blockchains, having already built blockchains for a number of different uses, makes it practically very difficult for a regulator to let them slide. But I thought what would happen is they would say Ether, Ethereum, Monero, Litecoin, even Ripple. They would list 8 or 10 or 12 and say, these are securities and we want them to be regulated as securities, but they are exempt from what we are about to do to everybody else. So I said that their statement today was definitive because they lumped two things together, Bitcoin and Ethereum, and didn't mention any of the other 8 or 10 or 15 that I thought they would. So I suspect what they will be doing is carving out something for a very small number of more established projects. That's why I said what came out today was incomplete. But let's forget about that side because the step they took was enormous today. Now, what are the implications? Nobody knows. The immediate implication on price was a little pop in Bitcoin. I have not pulled up Ethereum, but we're going to do that just to see what happened with that. I just haven't watched Ethereum or anything else until today. Now I will start watching and talking about and analyzing Ether because it's now legitimate from the point of view of the regulators. Therefore, it's legitimate in my mind that nothing evil is going to happen to it. Therefore, we can go ahead and analyze it and try to understand it, which many of you do already. But the implications of what they did today, I think, are huge. There's the possibility that a huge number of ICOs that aren't included in my theoretical basket that we haven't heard about yet, 10, 15, 20 others. The other 2,000, I think, are in big trouble and will start showing it in their prices very, very quickly for very good reason. And I listed some of those reasons today on Twitter having to do with they will be punished by the regulators. The regulators can't let them go with a slap on the hand. And what does punished mean? I don't know. But there's a gamut of things from civil lawsuits to federal lawsuits to state lawsuits to criminal penalties to misdemeanors to very large fines to trying to get money back to investors. And it will take months to sort that out. I would not want to be holding any of those while that process is going on. I think you will see them start closing their doors, moving to other countries, or if they are from other countries, going into hiding, taking the money and running as best they can, as quickly as they can. That's a huge leap on my part. I understand. I just believe that that's how significant this was today. Now, what does it mean for Bitcoin and Ethereum? Eventually, it solves one of Bitcoin's biggest problems, which is it is like rubbing salt on your body after being in a leech infested lake or swamp. Because when you rub salt on a leech, it drops off from you. And that's what the SEC did. These leeches, I've called them jackals and hyenas and mosquitoes and ticks and everything else, lampreys, that are parasitic, have been so to Bitcoin in the original blockchain. And they will begin dropping off very, very quickly, either through regulation and prosecution or because they simply won't have any following very quickly. Well, that's got to be great for Bitcoin and Ethereum. But what does that mean? Does it mean it's instantly great? Does it mean that the price of Bitcoin and Ethereum should begin to skyrocket as every one of these things begins to drop away? I was under the impression that Hyperwave was basically a measurement tool for the amount of barnacles that were beginning to weigh down the ship of Bitcoin. And through the first half of the chart that I show, the Hyperwave chart of Bitcoin, Bitcoin was so strong, even with all those things attaching themselves to it. But it got to a point where it confused everyone, regulators, investors, the ecosystem as a whole, fighting with each other, the maximalists against everybody else, everybody writing articles, everybody pointing fingers. And at a certain point, that simply hit a tipping point, which was the phase 4 into the phase 5 of a hyperwave. And we've been undoing all of that ever since. So my explanation from a fundamental point of view of why this hyperwave peaked out as early as it did was that it was the ecosystem. It wasn't anything about Bitcoin. It wasn't anything about the blockchain. It wasn't anything about the theory. It was all this stuff added to it. And this is the first step to eliminate that. So is it possible that my phase 1 at 1,000, which I assumed would eliminate all the other cryptos as they fell with it, now all of a sudden there's a new story. There's a new way of looking at it, which is maybe the SEC is going to speed the process up by which Bitcoin can get back to what it was doing, which I have believed all along is a grand experiment that has already proved itself for 10 years and will be around 10 and 20 and 30 years from now. Now, I know that's not helpful, but it will, if you just remember it in days and weeks to come, I will refer to that when talking about my intermediate and long-term targets, because it is possible that things are about to happen in the next days and short weeks that will make all of this much, much clearer. So I just wanted you to get my take on all of that. The only thing it's done for me short term is to go from neutral to positive with the target slightly above where we are now, 72.50, which we will talk about why that target when we get into talking about pulses and how this 5% short-term movement is actually used in my mind when I'm making these short-term calls. Okay, so I'd love to hear what you have to say so I can finish my popsicle. And because I'd love to hear what you have to say.
What is this? Well, actually, I have a question back to you, and I think I'm going to turn this mic off. How do you think it's going to affect international markets, specifically listings on other stock markets?
It will affect it because, and I know the rest of the world hates to hear this, but I deeply believe it. What the US does will spread very quickly to all major developed markets. And then because of that, it will spread to the secondary and tertiary markets. It will probably never affect Venezuela or even Russia or maybe even some of the bigger nations that are really into crypto. But it will have a big effect. And since so much of regulation follows US regulation, it hasn't this time around because our regulators were very slow in acting, but now they have acted far more decisively than any other regulator by this action today. It's huge. So people have been asking, well, what if an exchange is just trading cryptos or tokens that are indigenous to one country or a region? Some of those are owned by people all over the world, not just by people there. So they will be affected. And it is not going to be immediate. I've been telling consulting clients today, there's no reason to panic. There's no reason to buy. There's no reason to sell. This is going to take time to play out. But the gauntlet has been thrown down, and it's the size of a blue whale. It's enormous. Don't underestimate, in my opinion, what the SEC has done today. What's been your reaction, Leah?
A couple more questions for you.
Okay.
And thanks for indulging me. These are just my own. The regulators, no, you did not just pull out another.
It's a banana.
Oh my God. Okay. Well, Clayton, at least, if you remember last week, came out and said that they're not going to bend the rules or change the definitions that the SEC has had on securities. Tone at the very end, when obviously because the statements came out in the middle of the show, he mentioned the Howey test, which has always been really a standard definition. So I guess just question to you is, in the end of the day, though, this is completely new. It seems quite difficult for the SEC or really any agency to apply definitions that they have created to this asset class, to especially the ICO world as well. I know, not even, maybe even more confusingly to Bitcoin. But so how do you see that as even being practical, or how are they going to justify and back up their statements with really the jurisprudence of Howey test, or any other definition that they have in place that they want to bring up?
I think there will be lawsuits. There will be lawsuits by a number of the basket that I talked about, number 3 through 20 or 25 or 15 or whatever it is, for clarification. There will be tremendous lobbying trying to get into that basket by the other 2,000. There will be, once the SEC either says there are only 2, then everybody else will start the process of challenging in court. You can't do that because of these established definitions, which means the SEC might have to go back to the legislature and change the law to override what has been said before by the Justice Department, which means you could set up all kinds of stuff. This is not going to be quick. That's what I'm saying. I'm saying everybody sit back and take a breath. The circus is about to begin. I can hear the elephants now, and it's going to be quite a show. That's why trying to predict what is going to happen from this enormous step, either forward or backward on the part of the SEC, is so difficult. I know as a technical analyst that whatever is going to happen will show up in the price, first on the short term, then on the intermediate term, then on the long term. And so far, the short-term reaction has been very muted, which surprises me. I thought after I heard that we could see 72.50 by the end of today. It didn't. That surprises me. I think everybody is in shock. Attorneys are running around all over the country and trying to avoid the phone calls they're getting from thousands of sources. I agree with Tone that the one case that that makes clear the definition of a security when talking about other things that are not obviously securities needs to be addressed, but only to the extent of Ethereum, not to the extent of anything else, because nothing else has been named yet. They haven't said what they're doing. which I think was very smart on their part. In other words, let's recognize the one thing we know for sure, which is Bitcoin. And let's tiptoe in with regulations by starting with one other possibility, which is Ether and Ethereum. And then let's watch the cannons fire and let's sort it all out before we take the next step. Now, they've already done that. They just haven't told us. We don't know what the game plan is going forward, but they do. And the Justice Department does. And many, many legislators do. Because the SEC and the CFTC have been laying the groundwork for this, starting with the acceptance of the CME and the CBOE and GDAX. But they're taking it one step at a time. I think they are doing it the correct way. I wish they had done it 3 years ago. It would avoid the problems we're about to have. And if they had done that, in my opinion, Bitcoin would be much, much, much higher than it is right now.
Thanks, Doug.
Yeah, go ahead. Sorry.
Going to evoke you as a technical analyst, but as a maestro of fundamental analysis as well. Given those statements, how do you think that that fundamental analysis will also now play into the price action that we'll see? I mean, just simply put,
I can't answer that today. I've given you some conjecture on my part. The fundamentals are now going to change very, very quickly because there will be legal fundamentals, there will be legislative fundamentals, there will be practical fundamentals having to do with what I said about all the altcoins that no, they're not going to be included in any kind of a basket. What's just happened is the SEC is at the top of a very, very big ski slope. And they've just made a snowball and they've rolled it around till it got bigger and bigger and they just rolled it over the edge. Now, how big it gets, how fast it goes, does it bring down the whole mountainside in an avalanche? We don't know. But we will know by looking at in slow motion every inch that ball begins to roll. It's going to mean that technical analysts are going to have to really be on their toes because the fundamentals are going to begin to shift very, very quickly. But they have not yet. This is too early, but it will begin happening very quickly, I believe.
Okay, last question before I make you throw up the charts. This could very quickly usher in, I think, Ethereum futures being traded and these index funds, but a lot of vehicles and instruments that are already in place for Bitcoin. I don't see why, although, obviously GBTC isn't the best, but it was the only blessed SEC security at the time. And Grayscale had already been talking about how they want to roll out a variety of other altcoin products, specifically Ethereum. The overarching question to you is, how do you think institutional interest will change right now with at least the SEC coming out with fairly definitive statements, at least on Ethereum and Bitcoin?
Yeah, great question. And remember, there is a huge difference between a bunch of companies can very easily throw in the towel and say, you're right, SEC, we are a security, we are registering as a security, hit us with your best shot in terms of punishing us for what we've done, but know that we are in business for good because our technology and our blockchains are very useful projects. Tone does not disagree with the fact that the technology in some of these other cases is actually has the possibility of being very useful. That's not what he's been arguing. He's been arguing they're scams because how they raised money, period. How they raised money illegally by pretending not to be securities. And the SEC has just slapped that down. But that still leaves open all the great companies that are getting involved in blockchain development, blockchain usage. Even though I agree with what Giacomo and Jimmy and Tone say about most of those projects don't need to be on blockchains, but that's a different argument. The world, the market will sort that out. It's having trouble doing it right now because it's all so new. But the developers that we know, Leah and I know, through her brother and my son's company, 1 out of 10 of people that come to them for building blockchains, they say, you don't need a blockchain to do this. And that's probably about the right ratio. 9 out of 10 that are trying to or think that it will be helpful to them, Jimmy's the first one to say, no, it's not. And but that doesn't change the fact that there is a potential ginormous use for all of these things that are being developed, for smart contracts and a lot of other things. It's just how they need to be applied and when. So I don't see this as the end to cryptocurrencies, or it is the end to tokens. Now, is it possible for someone who wants to issue a token to do it by registering it as a security? Yes, of course. So they have to make that decision. But when Tone and everybody calls so many of these scams, what he's talking about is most of them out there, their intention was to make money by taking money from investors and giving it to themselves. That's the point of issue. You can use tokens, and nations around the world are going to try to use them in different ways. That's a different question. If you're going to do it by the rules. So a number of them that understand what I am now saying will do that, and they will abide by the rules. And they will be around after getting slapped around a little bit. But if they are smart, in my mind, they'll pull a mea culpa as quickly as they can and on bended knees get in front of the SEC and say, okay, yeah, we got some bad advice. We made bad decisions. Tell us what we need to do. We're 100% in your court. We will follow all the rules. And those will survive. It will be a tiny percentage of the number that are out there.
Thanks, Ty. Yeah, I was thinking about this one a lot today. And we often talk about the importance of definitions and ensuring that we ourselves, but people don't just throw out words. Because each word is very meaningful. We know my love of languages, and especially in some languages, each word can be very poetic. So, but with that said, I did look up the word scam today, and it was very on point to exactly what you said, and also to what Tone says. And I think that everyone should understand exactly what he means by when he says it, which is exactly what you just explained. But really, the definition of scam is a fraudulent scheme, and it can be performed by a dishonest individual or group, or in this case, a company, in an attempt to obtain money or something else of value, period. So with that said, 1,000% by, really taking the two as separate technology and also what was done in the token raise. But I just thought that was really interesting today and enjoyed looking up definitions every once in a while.
Yeah, that's great. That's great.
So with that said, Ty, what's going on in Bitcoin?
Okay, let's take a look. We will get to this in just a minute.
Yeah, fun with circles, eh?
I'm going to go to the shorter term. Here's the bottom at 6120. We're looking at a day chart. And it's taken us 1, 2, 3 days to get back to about 6,600. The high here is 6708 earlier today. We're pulling slightly back from that. So this is the SEC move, basically, which is really very muted, and it's short covering. Anyone that was short didn't know how to react, and I think for very good reason. But it didn't go very far. It's too early to make any definitive statement in any way about what we're about to see. I think we could get up as high as 7,200, 7,250. And people have been wondering, why did I say that? And there's a number of things that leads me to these things I call 5% pulses up and down. And I will spend a little time explaining that a little bit later with that chart that I just pulled up, which isn't on Bitcoin, it's on the Dow Jones Industrials. You can use it on any chart. I used to do it, as I told everybody, with the S&P 500 for years. Every week we would try to decide what the next 5% move of the market was, the S&P. Okay, why 7250? Well, if you come over here to these two daily, this first down one had a high of 7445, a low of 7,085, and closed at 7112. The one in front of it, this little doji, has a high of 7412, a low of 7213, and a close of 7347. The one following it got up to 7537, but the low was 7,026. So if I were to draw a line at cute. If I were to draw a line here, stop it. Okay, let's go. Oh man. Let's try it again. Boom. Beautiful. That line is 7345. So we're under that line, and that line's pretty important because look at all the activity above it. And look at what happens when we break down out of it. So number one is simply an obvious, fairly close target that's about 5% plus from where we are at the time I make that call. But let's look at some other things that were pointed out on Twitter today by a number of people. And thank you all for the amount of activity and interest that you're showing by going and doing your own research and then coming back with your findings. It's really terrific. And it makes it makes our little ecosystem really unique, and I really appreciate it. Okay, so let's throw something else on this chart. Let's throw Bollinger Bands because someone brought that up. This is a daily chart again. And remember, the short term is based on dailies. I'm going to show you weeklies with the Dow, but the short-term targets that I use are always daily because my definition of short-term are days. My definition of intermediate term are weeks. And my definition of long-term are months. So as you move to those various, very different areas, you have to use different techniques in analyzing them. But let's just take a look at this now, with the Bollinger Bands. Remember what I've been saying about Bollinger Bands. When you're below the middle line, the tendency is to try to break down through the bottom line, not just on a piercing, but a close. And on the way down, we couldn't do that. We just walked down with it. Then we got a little excitement with this candle bouncing off the bottom and starting a move up. So when you're trying to make a determination of short-term movements, if the Bollinger Band can break through the middle line, it greatly increases the probability that it's going to go up to the top line. And it needs to close above that, not on a wick, but a whole candle, if at all possible. Now, here we had a couple of candles that were above, below, but never completely above that middle line. And then we slipped further on the close here below that line, and then everything fell apart and went back below the lower line. That's the way Bollinger works. Okay, where is the mid Bollinger Band? Right here, 72.50, 72.39. So that's a logical place if I've got evidence that we are bouncing, which I now do because we've had this entire candle, other than the wick, below the low. Then we have the SEC and this move today, taking the close above the low. And now we're working on a candle completely above that lower line. Now, I didn't know this was going to look like that when we closed at 8 o'clock tonight, 45 minutes ago, but there it is. So another way of making a projection of a short-term nature, 5% plus. Now, let's just say on a $6,500 price, 5% is less than $400. So $400 would be 6,900, 7,000-ish. Well, I could have just said 7,000, but in this case, as in a lot of other cases, I talked about Tyler Harris posted a bunch of these short-term trades on Twitter, and I thank him for it. And Lee and I are going to do a whole show on the actual short-term calls we've made over the last 3 months using this technique I call pulses. And we're going to go into that in just a minute. But so if 7,000 is a logical place, and it is, you know, Tones talked about a $7,000 target. I talked about a $7,000 target as a possibility. That's using different techniques, the sequential technique, a bunch of different things. But let's just take it as a given that 7,000 is a possible, these lows over here. But because of this middle band, I gave it another $250. I don't mind if I get my 5% and then it goes, and that's all we get. It never makes it to my target of 72.50. I consider that to be the right call, meaning going from neutral to positive and at least hitting the 5% target. If I'm right, you're going to get another percent or 2, 3 on top of it if it gets to 72.50. That's why I chose 72.50. But there's a bunch of other reasons too. So someone said, made a calculation of a 5% move and said, here's this price and here's that price, and a 5% move would be this price. And my answer was, there's nothing magic about 5%. It's not a sacred number. It is a practical number what I have seen in terms of minimum pulses in Bitcoin. It's different for other asset classes, but what I want to do for a second is I want to get off of screen share and just talk a little bit.
Ty.
Yeah.
There was a question about Bollinger Bands, but maybe you can do it off screen share, but let me ask. Doesn't it matter that the midline on the Bollinger Band is declining rapidly? It seems it will meet price instead of price going up to it.
Yeah, absolutely. Absolutely. The direction of the bands are important. And I showed, and I'll show a little bit later when we get back to it, that what happens when a market drops very, very rapidly is a lot of spooky things begin to happen with Bollinger Bands. The top line turns up. The bottom line starts dropping like a rock, and it can drop so fast that the price can't catch up to it for a while until the price stops going down that rapidly and starts going sideways. And then the bottom Bollinger Band will come up and meet it. So absolutely. It's not just price, it's also the direction the Bollinger Band's going. But remember, my short-term moves are short-term. We're not talking weeks. We're talking very short number of days, maybe a day, maybe 2 days, maybe 3 days. It could go longer than that. But so when I make a 5% projection, I'm talking about, I think it's about to happen, and I think it's going to get there pretty quickly. So what the Bollinger Band is actually doing in that middle Bollinger Band is not really going to affect by more than $50 or $100 the intersection point of the price. But that's a very good question. Okay, pulses. What is a pulse? Well, you know as well as I do what a pulse is. Just feel your wrist. That's what a pulse is. There is a bump that takes place as blood circulates from a muscle that pushes it through in a rhythmic base. And in between the spike, there is a lull. That's what a pulse is. There are all kinds of pulses. There's pulses in terms of respiration. You breathe in, things happen, separates carbon dioxide from oxygen. You keep the oxygen or a major portion of it, and you breathe out the carbon dioxide. That is a pulse. Trees do the same thing in the opposite direction. They bring in the oxygen and keep it, and they bring in the carbon dioxide and keep it, and they breathe out the oxygen. Thus, the symmetry between animal life and plant life. One feeds the other, and the other feeds the one. There are things called pulsars, Pulsars, a cosmological term about something that emits radiation in pulses. Everything we do, the wake-sleep cycle is a pulse. I used to love driving through the West and looking at mountain ranges from a distance, because a lot of them form hyperwaves. They start up at an angle as you come off the prairies, and then the angle goes from a phase 1 flat to a phase 2, and then a phase 3 and a phase 4, and finally it hits its peak and comes down the other side until it's flat again. All of this kind of stuff works in the real world as well as in these charts and technical analysis. You don't see anything going straight up. You don't see anything going straight down. It seems like it sometimes, but break it down and you'll see that when something moves up, it then moves sideways for a while. Then it moves up again. Those up moves in a bull market are pulses. the flatness where the market is catching its breath is neutral. Usually goes flat. Sometimes it will actually go down. In a down market, just the opposite happens. You go down and then you correct by going flat to slightly up. And then you go down again. That's the second pulse. And then it'll go flat, then the third pulse, and so on and so on and so on. Well, you can measure the size of those pulses in percentage terms of the movement. And they're different for different things. The 5% number is pretty good for Bitcoin on a short-term basis. Okay, so pulses, we're talking about rhythms and turning the light on and then turning it off, the sun coming up, the sun coming down, the earth going around until it completes a 24-hour period, on and on and on, everything in nature, all the way down to the ultra microscopic molecular level and below. And in the other direction, throughout the universe, in terms of the way movements take place. We are not immune from that, and because all price is determined by people and runs between greed and fear, you get bull markets and bear markets. And they always reverse themselves. And on the way up, they stop and they pause and then they go up. That's what short-term pulses are. That's why I look at 5% moves. Okay, back to the charts. First of all, we will take a look at the Bollinger Band. And it is coming down, you see, but it is not really coming down that quickly on a daily basis. Here, the band is approximately 72.66, and in the previous period, no, I can't use that because that's not a complete one. So we'll do the previous period, which is ended about an hour ago, 72.75, let's call it. And on the previous to that, we will call it 73.11. So 72, whatever I said. So whatever that comes out to be, it's a small number. That's the rate of the slope. Now the slope will change depending on what prices do, but not that much in the middle. You see over here on the left, this slope is pretty constant, and then it accelerates because the price went down. And then this slope is pretty constant because the price came back up and went sideways. And now this slope is the result of this movement. Whereas the lower band is dropping very sharply, but look at the upper band, it's going up. So it's going to be harder to reach that. But so I don't worry so much about this. It is true that if we go a week or 2 weeks, then it's a substantial difference, but not a couple of days or so. So 72.50 is fine for now. And if we don't make it up there, if we stop at 7,000 or something, or if we start going down again, which is very possible, if people become very disappointed that this great news for Bitcoin only caused this little spike, you could get disappointment very quickly and this will turn down and I will go from positive back to neutral, and then I will go from neutral back to negative, but only after I can collect evidence that that's what the market wants to do. This was a bit of a guess today on my part, based on how important I thought that story was. So that was a fundamental call, but it was based on a lot of technical indicators about our inability to break down through the 6,000 bottom, which is now a triple top, which you know through all of Tone's work. And here it is, 1 at 5,900, 2 at this 6,300 level, and this most recent one at 6,100. That's a triple bottom coming off of this lower band, I was already thinking about going from negative to neutral, which I did, and neutral to positive, which I did, but only after the fundamental news came in, they gave me more evidence that that's a possibility. Okay. All righty then. Where is Bitcoin today? No change. Same old story. We'll go. What the heck is that? Oh, yeah. Okay. So what we will do is we will go and take a quick look here. These are the Fibonacci's from 1,000 up to 19,666. We're still stuck in between the 61.8, which is up over 8,000, 8,159, and above the lower one, which is 5,016. When you break a Fibonacci number and you're staying below it for 4 weeks, that's bearish, and it should mean that we're going to go down here and test the 5,000 level, which is the phase 2 line now also. However, just because you're below or in between two Fibonacci numbers, if you've got a lot of support here and the ultimate low here and these tops over here, then you've got to be aware of the possibility of a bounce off this level, with or without the SEC. And that's really what we saw. So it has not changed anything other than a very short-term call based on both fundamental and technical work. I'm not going to go through everything because you've seen it all, and because I just said nothing has changed. There's the SARS for a week, not changed. Here's the daily, not changed. Here's the 6 hour, not changed. Yay, the 6 hour has changed. That's good. That's good, because that means that my switching from neutral to positive has some evidence on a shorter term time frame. The 12 hour has not done that. It will come close. Wouldn't that be amazing? Let's take a look at that. 7,083. If we penetrate that this week, no, I'm sorry, in the next 12 hours, then that will give us a positive turnaround on the SAR. But the 6 hours already done that, which means the shorter time frames already have. 4 hours did it a long time ago. 2 hours has done it. 1 hour. So the evidence on a technical basis that there was some kind of support there down at that 6,000, 6,100 level is now becoming obvious on the short-term basis. And it could spread up to the 12 hour. We just looked at that. And might very well, if I'm right, that we could get up to 7,200, but it's not going to go any further than that. The daily is up at 7,500, possible, if people become very excited about the SEC overnight and tomorrow, or if other countries get excited without understanding what's going on. 8,000 it's going to take to turn this one around, the 3-day, and the weekly you're going to have to get up to almost 9,000. So long term, still in a downtrend. Intermediate term, still in a downtrend. Short term, positive. That's the Bitcoin story right now. Okay, I wanted to talk to you about this. This is the Dow Jones Industrial Average on a weekly basis going back July, August, September, 1 year. These little ellipses and circles take in every one of the candles. These are pulses. The green are up pulses, the red are down pulses. Notice that they keep changing position. Start with green, then to red, then to green, then to red. Excuse me. Green, red, green. I'm going to get some water.
While Tyler's getting water, I saw your one question about S&P on a short-term basis. And do you guys have any other questions? I know that we're going a little bit late, but I am monitoring your live chat. So let me know.
Okay.
Maybe I'm getting a popsicle.
Yeah, please put your questions in. And this was supposed to be, no, it wasn't really supposed to be short. I knew we would be talking about a lot of things. So sorry to surprise you. Okay, green, red, green, red, green, red, green, red. Red, green, red, green, red, green, red, green, red, green. All markets do that. And what those ellipses are is they're just trying to capture the pulses. Some are small, some are short-lived, but they just keep pulsing. If you add the percentage move of all those pulses from top to bottom and divide by the number, you'll come out with some number. And that number should be at least 5% and could be as high as 10%. Sometimes it's much bigger, like this drop here. And usually that only occurs on a change in direction for a period of time. But also notice that the greens in an up market are bigger than the reds. This one's about the same as this. This one's huge. This one's small. This one's bigger. This one's small. This one's bigger. In a down market, the reds are bigger than the greens. This is bigger than this. This is bigger than that. This is smaller than this. Then we started getting them moving about the same time the moving averages were crossing back over. And now the greens are trying to get bigger than the reds. Okay, I'm not trying to give you anything other than a way to visualize the way markets move. All markets, Bitcoin, any crypto, anything, any stock, any bond, any index, the real estate market. The more liquid markets have shorter pulses, the more illiquid markets have much longer pulses in terms of time. So it's not one size fits all, but it's very easy if you're looking at a stock that's very, very active to just do this kind of a analysis and figure out what would be meaningful to you as an investor, knowing that you're getting very close to a reversal because of these flat periods after a period of growth. Here's the pulse, here's the correction. Here's the pulse, here's the correction. Here's the pulse, here's the correction. Here's the pulse, etc. So you want to view the asset that you're looking at as a living thing that will always be predictable, not in terms of when and how far it's going to breathe, but that it is going to do that. And if you are a day trader, meaning you're going to be trading for minutes or hours within the day before you close down what you're doing and go home, 5% is a ridiculous number. So you have to scale that 5% down to the time that you are watching these little wiggles. Because these little wiggles, if I change this from a weekly chart to a daily chart, to an hourly chart, to a 30-minute chart, to a 1-minute chart, to a 1-second chart, will all look the same in every market, all the time. So it's a way to visualize the movement of markets. Now, somebody would look at this and say, well, really, there's only 2 moves here, and maybe we're starting a third. There's a big up move, which I wouldn't want to jump in and out of, in and out of, in and out of. That's up to you. That's completely up to you. What I'm saying is I have found it very helpful at any point on a chart to try to gather evidence technically and fundamentally of where the next 5% move is going to come from, where I'm sitting right now. And I think you will see as you go through that process and look through our tweets for the last 3 or 4 months that it's been a very effective way to take cover when cover needs to be taken, or to get aggressive when it's time to get aggressive. A 5% move can turn into a 10% move, which can turn into a 15% move. Here we're going from a high of 26,500 down to 23,500, or 15% approximately from top to bottom. But if you had been looking for the next 5% move, as the short-term moving average began to turn over, you could have very well saved yourself 10%. And then as things began to, other technicals came into play, like bouncing off of the longer moving average, you now ask yourself, where is the next 5% move going to come from? So it is an incremental way of adjusting your view of longer term trends. And that's what a pulse is. And that's how I use them. And that's why for Bitcoin, I've been using 5% on a daily basis. And with that, we have run way over. And why don't we go back and see if there are some questions we can try to answer.
Always. Ty, are you able to throw up a quick chart of the S&P? Otherwise, maybe tomorrow.
No.
Okay.
Unless you want to pull one up real quick. I was using stock charts, which are not as flexible, and also my Bitcoin wisdom.
And while I do that, question number 2. What does it mean if we don't ever go back to the phase 2 line? I'm going to read it verbatim. And it's proven as support. If we were to just drop to, say, 6,000 and then never go back down, what does that mean for hyperwave, i.e., if we don't have the chance to test the phase 2 line at 5K of the hyperwave and say only go down to 6K, then back up to new all-time highs, where are we then in the hyperwave?
Well, that's great, and that's what we all should be hoping for. And it does nothing to the hyperwave theory. It means that the phase 2 line held. We didn't even have to test it. And we are in phase 2, and now we've gone all the way up to new highs, which means that we are working on a phase, maybe still the phase 2, even at new highs. It depends on how long that takes to occur and what the angle is of the price movement from 6,000. That will determine everything. There is no phase 3 line anymore. That disappeared when we broke it. But you don't need to penetrate or to even touch a lower phase line. It is valid until it's broken on a weekly closing basis. So if it is not broken on a weekly closing basis, it is valid, and we would be staring in the face of a funky hyperwave only on phase 2, and there's glorious things ahead.
Perfect. Ty, are you able to see the chart?
Yes, I do.
Great. It was pretty.
And what was the
moving averages on? But
that's okay. This is the S&P weekly.
I have it on daily. Yeah.
Okay, that's fine. Was there a question on that?
Just if you could look over, just.
Sure. I agree with Tone, because all the NASDAQ, the Dow, and the S&P are throwing all kinds of 9s out at us, weekly, daily, a little bit out of sync with each other. But I fully expect a drop from here. You can see on this chart.
Nope, actually, I'm not going to do that for tons.
No,
yep.
Oh, I see. But take a look at the short-term moving average and look at the price action for the last 2.5 days. We hit a high yesterday, meaning today ending at 4 o'clock. No, that's Bitcoin. Anyway, for the last 3 days, we've kind of flattened out, and that's turned the short-term moving average down. It's about to cross the intermediate-term moving average. Tone's sequential is giving all kinds of 9s, both on the daily and the weekly basis. I think there's a bunch of 13s, which means we're going down. Now, Tone believes probably on a weekly basis, 1 to 4 candles and then turning up, but that could be a month away. I don't think it does any damage, but I'm not going to say what I really believe yet because I don't have any evidence. I'm fully invested in the market for my clients that I either consult with or have fiduciary responsibility over their accounts. We're 100% invested in equities. Because of the bounces off the moving average and because the moving averages for the last 10 days have all been in a bull market. Well, now all of a sudden we've got the short-term moving average crossing below the prices and crossing about, it will shortly, the shorter-term moving average. So normally I would take something off the table, meaning 10 to 15%. So instead of being 100% in, I'd be 85 or 90% in. I'm not going to do that yet because this downturn, you've got to really understand the differences that Tone makes between a 1 to 4 candle retracement and a full-blown 9. And his interpretation of these charts, NASDAQ, S&P, and Dow, are that we're in for 1 to 4 candle backup. I know sequential very well. I learned it back in the 1970s, as I've told you. And I learned it from the originator, a guy named Larry Williams. But I cannot, I now interpret it the way Tone does because he's taught me how to do it. And he's taught you all how to do it, which is the point. He doesn't want you to follow what he's saying. He wants you to be able to do it. When Leah went to Tone's class and learned it, to strengthen it in her mind, after that class, I had her make the calculations herself by hand, as opposed to letting the computer show you where the numbers are. And that's what you need to do. You've got to understand the principles behind it, how they're calculated, and then you can take the shortcut of just looking at the numbers. And so anyway, but even with all my experience, I wouldn't have been able to make those interpretations that Tone does on the difference between a 1 to 4 candle retracement and a full new 9 retracement. The fact that I've watched him for a long time and have become completely confident in his ability to read these charts is enough for me that when he says this time on these charts, he's expecting a 1 to 4 candle retracement, I'm all in with that interpretation. Now, I might look at some other things that give me other evidence that he might not be looking at. And remember that Tone puts this system, the sequential system, in third place in terms of what he believes is important. Not first place, third place. First place are the shape and the style of the candle. Second is the grouping of the candles, the formations, triangles, and other things. And the third is what we were just talking about, the sequential system. Well, I'm the same way. I have a group of things that I look at when I make decisions, and sequential is only one of them. But it's a powerful one in this particular case for me to stay fully invested and just wait it out. Because after that, we're going to go much higher, in my opinion. And I don't like jumping in and out of positions. I did jump in and out of positions when we began to deteriorate on the NASDAQ 100, the NASDAQ, the Russell, the Dow, back in late January, early February. I pulled 15% off the table, but I held that 15% for 2.5 months because of all the other technical things that were saying this could be bad. And you've heard me say that to you directly, that back then I was very worried because of a broadening top in the NASDAQ, which, by the way, has not been negated. So even though I'm fully invested here, and we can talk about that a little bit later, even though the NASDAQ and the NASDAQ 100 have gone to new highs, they haven't gone far enough to new highs to negate that broadening top. But that's really in the weeds, and we'll talk about that. But it is on my radar scope, so that if tone turns out to be wrong, and not wrong from the point of view you're either right or you're wrong, but wrong that this interpretation of 1 to 4 compared to a full-blown 9 is, if he puts probability on that and says he believes 60 or 75% that it's a 1 to 4, but it's still 25 or 30%, it could be a full 9. I'm keeping that in the back of my mind, because if it does begin to deteriorate across all major indices, then I become worried again about that broadening top on the NASDAQ. Okay, too much detail, sorry.
All right, everybody, I think we'll cut it there. Tyler, everybody, thank you so much for watching. Maybe I'll squeeze in one before going to the hospital tomorrow. Probably not the best idea, but
I won't let you do that.
Okay. All right. Well, then, until next time. Thanks, Ty.
Okay, thanks, everybody. Bye-bye.
Bye.